The purpose of this video is to provide a quick, high-level overview of something that I'm calling the Seattle method. Well, let's get right into that. So the Seattle method is a proven, good practices, standards-based, pragmatic approach to creating provably high-quality, XBRL-based general-purpose financial reports that is explained in simple terms that a business person can tend to understand. Basically, it's a way of creating digital financial statements. So it's grounded in the Venetian method of double-entry bookkeeping. It's for building general-purpose financial reports that are machine-readable. The focus of the Seattle method is financial reporting using financial reporting schemes such as US GAAP, IFRS, Australian GAAP, UK GAAP, and other robust financial reporting schemes where the preparer of the financial report is permitted to modify the report model. So I'll explain that in a minute. I'll explain it right now. So basically there are two approaches to creating a machine-readable report. One is the standardized approach, and XBRL has a way of doing that, the data point model, and people use that. It's fairly straightforward because it doesn't change. It's basically a form, and you've got very good comparability of information, and information quality tends to be excellent. But the problem is you lose some idiosyncratic detail of the reports, reported information, because you try and put everything into one form. An alternative is to allow the users to customize the form. Okay, so US GAAP does that, IFRS does that, and other financial reporting schemes. So there are two ways that you can allow customization. The first is free-form or uncontrolled, and the second is controlled report model. If you're using free-form and things are uncontrolled, you have very poor comparability. Information quality tends to be poor. You get all the idiosyncratic detail that is preserved, but you can't read it because everybody did things in their own way because it's free-form, and therefore you can't really read the information. An alternative approach is to use a controlled report model where you provide specific instructions about what is permitted, and that allows excellent comparability of information. You preserve the idiosyncratic detail of reporting entities, and the report quality is high. So this is what the Seattle method achieves. Basically, controlled report model, and you're controlling the report using the characteristics of financial accounting. So again, if you want more information, go to my website. Just search on the Seattle method, or you can see the URL at the bottom of the page here. But here's the problem. I'm not going to read this, but I'm just going to basically explain it. If you want to exchange information, you have to do things to make the information exchange possible. So I'm going to explain that with this graphic. You basically, in order to effectively exchange information, such as a general purpose financial report, which is basically a complex message, you have to share a common worldview, a common inference logic, and common background knowledge, so that the information bearer and the information receiver can know that they're looking at the same thing and interpreting things correctly and effectively. So the report is the message, and the Seattle method basically helps you keep the message clear. So there's some things that are very important to understand about financial reporting. These it makes financial reporting a unique type of business report. Basically, it's a mathematical model. So the first thing is financial reports are grounded in the double entry bookkeeping model. Basically, debits equal credits. That bookkeeping model has to comply with the accounting equation, which is assets equals liabilities plus equity. There are other forms of that. Basically, there's a form of an accounting equation for every reporting scheme. So each reporting scheme defines a set of interrelated elements that are grounded in some version of the accounting equation. You see the terms below there. That's what U.S. GAAP uses. And the financial reports are intended to fit together. So I'll show a graphic of this in a second. But basically, it's not just a bunch of stuff packed into a report. It's all connected together. And you can use these connections to help you make sure that the report is created correctly. The fifth thing is there's an inherent variability in this reported information because different subtotals are allowed to be provided in a report, either provided or even left out. So you have to deal with that variability, but you can leverage all the other aspects, and it actually creates a very good mechanism for controlling financial reports and keeping the quality of the information high. So this is what I mean by articulation. This is a very small example of a financial report, what I call my proof. And my proof is a precision testing tool, basically. But you can see in that small model all these things that are connected. The little red lines show, the connection between the balance sheet and the income statement and the cash flow statement and the details and other disclosures that are used to elaborate on the reported information. So this can all be leveraged. When you verify a report, I'm not going to explain this in detail, but basically a report has different levels, and level 0 is it's not even machine readable, and level 7 is it's machine readable, and you're using things to help trust the information to make sure it hasn't been tampered with, and you have an audit trail and blah blah. But if you understand these, then you understand where you want to be in this spectrum of report levels, and you can basically create software that keeps the reports of a quality level that you need to make your reporting system work. So basically, a financial report is a logical system. It can be explained by a logical theory. You can create a model. The model can have different structures. Structures have different logical statements. Terms, associations, rules, and facts are different types of statements. And this is a financial report is basically a knowledge graph that is explained by a logical theory, and I provided a logical model that lets you work with the logical pieces of a financial report rather than the technical syntax level. And what most people, their head is still in the left-hand side of this diagram, the data side. What I'm providing is what you need to work at the knowledge, insight, and wisdom level within a financial report. So a financial report is basically a machine-readable knowledge graph. And knowledge graphs are inherently easy to understand by business professionals. It's a very straightforward model. People build knowledge graphs all the time. They don't even realize it. I'm not going to go into this any further, but this is what a knowledge graph looks like. But you can take that information and convert it into something like that. you see in this graphic, which is basically a financial report, and you have all the connections, and it's machine readable, and you can work with the fragments of the report, and basically it's a digital financial report. And the Seattle method takes care of the details of getting the report quality high, so you can actually do all this stuff. And if you have machine readable information, you can build a knowledge-based system that works with the report, and you can do things in different ways using automation. Accounting was intended to be used by a computer, but computers didn't exist in 1211 when the double entry accounting model was created, or in 1494 when Luca Pacioli documented that model, and then it became basically a global standard model for accounting that is used by professional accountants. There are different ways to implement an expert system. The semantic web stack is one way. Graph databases is another way. Logic programming, Prolog, is what we used to create Pacioli, which you'll probably run into. But that's a brief explanation of what the Seattle method is and why it exists and what it does. And I'll stop there.